Hi guys, welcome to this Moneycontrol live stream. I'm Nandita Khemka and you're watching Opening Bell with me right here on Moneycontrol. Over the next 30 to 40 minutes, we'll be talking about all the cues for trade, all the stocks that will be in focus, and of course, all your stock related queries will also be in focus. If you have any queries, keep them coming in on a live feed on YouTube and we'll try and take them up. Of course, we are heading into the Independence Day holiday and we here at Network 18 are celebrating the spirit of Independence Day as well, which is why you're seeing me in this ethnic attire. But of course, lots to talk about, and the fact that today we have the weekly expiry for the Nifty as well as the Nifty Bank. Usually Nifty expiry happens on Thursday, but tomorrow being a holiday, the weekly expiry for Nifty will take place today as well. So brace for a volatile day, given the fact that it is expiry, even though we have a great set of cues coming out of global markets. Before we talk about all that, let's take a look at the top headlines at this hour. Wall Street clocks a strong rally overnight as producer price index for July comes in lower than expected at 0.1%, vis-a-vis expectations of 0.2%. The Nasdaq surges over 2%, while the S&P 500 and Dow gain over 1% each. Asian markets trade largely higher following a strong handover from Wall Street. Both the Nikkei and Kospi are clocking in gains, and the GIFT Nifty, of course, is hinting at a higher start for the Indian market. Crude prices fall over 2% as fears over global demand outweigh concerns over tensions between Israel as well as Iran. Hero Motocorp's first quarter numbers failed to meet estimates as higher raw material costs hit EBITDA and margin. Meanwhile, Apollo Hospitals largely meets estimates as healthcare services drive growth. Well, those were all the headlines at this hour, but let's take a look at the cues for trade then. Yesterday, we saw a steep sell-off come in with the Nifty, shedding somewhere around 200 points or thereabouts. In fact, there was a mild recovery during the day, but the market really failed to hold on to that, and we ended, largely at the session low. The Sensex as well slipped below that 79,000 mark, and the Nifty, of course, gave up that crucial support level of 24,200. But the pain point was really the banking pack, right? Because the Nifty Bank Index slid somewhere around 750 points below that crucial 50,000 level. So today, of course, the Nifty Bank Index will be in focus. Yesterday, we had the expiry for the Nifty Financial Services Index, and that index lost somewhere around 2% or thereabouts. And of course, we saw the pain on the Nifty Bank Index as well. And today, we have the weekly expiry for the Nifty Bank Index. So expect some bit of volatility. And of course, if we do make a comeback, we'll have to focus in on that crucial 50,000 mark on the Nifty Bank Index. All the indices except for IT ended with losses. HDFC Bank, when you talk about that was the major dampener and, fell somewhere around 3% following the MSCI rejig. And, the 100 out of 200 points, the 100-point fall on the Nifty was actually contributed by HDFC Bank. Talking about the F&O Qs, the Nifty put call ratio dropped to 0.7 vis-a-vis 1.03 in the previous session. Lot of stocks in F&O band today. If you talk about the new additions, they are the likes of Aarti Industries, which saw a 15% drop yesterday, given the fact that the management has said that they will be revising the guidance amid volatility. So that stock is in the F&O ban. Chambal Fertilizers is the other one that has made its entry into the F&O ban list for today. The stocks that will remain in the F&O ban from yesterday would be Aditya Birla Capital, Aditya Birla Fashion, Bandhan Bank, Biocon, Birla Soft, Granules India, India Cements, India Mart. It's a long list. LIC Housing, Manappuram Finance, PNB, RBL Bank, as well as SAIL and Sun TV. And one stock that has exited the F&O ban is Hindustan Copper. That stock saw a good up move yesterday on the back of good set of numbers for the first quarter. In terms of fund flows, FIs remained net sellers, though in the previous session they did, the FIs did buy shares worth 400 crore rupees, meager amount, but yesterday again they turned sellers, and 2,100 crore worth of selling coming in the cash markets, and the domestic investors continue to buy, continue to provide buying support. They bought shares worth 1,200 crore rupees in the cash market. That's all in all the setup for today's session. But let me also bring on board then Rajesh Palviya of Axis Securities joining in this morning. Hi Rajesh, great to have you on the show. Yesterday was kind of a forgettable day for us, right? 200 point down, 200 point loss on the Nifty, and the Nifty Bank Index shed quite a lot of weight. So here on, given the fact that global cues are looking positive, Gift Nifty is hinting at a good start. Would you expect some bit of bounce back coming in? And if yes, how should one really look at today's trading session in terms of strategy?
Good morning, Nandita. So yeah, in the previous day, we have broken the important support area of 24,200 and closed below to those level. Since last 4-5 trading session, we are continuously trading below to 20-day moving average for the Nifty. The most of the call writers are still having their short position around 24,300, 24,400 strike. And despite of pullback in last previous days, there is no covering in their short position. So I think 24,300 to 24,400 is the steep resistance zone for the Nifty for any kind of minor pullback, even if we see during the day. Because until the short covering not triggered, I think that may create some pressure around those range. So I think for this weekly option expiry, I think 24,300 to 350 is the major supply zone for Nifty spot. If we crosses those levels, then yes, there could be some short covering we can witness in the market, and possible rally can extend to 24,450 to 500 zone. But that looks still tough in this kind of setup at this juncture. Volatility is there in the market. Put writers are still having their position at 24,000 level. So that may act as a major support area. So I think one needs to find out the both side of trade. If you get opportunity around 24, 350, 400 zone, you can go short with stop loss of 24, 500. In the decline, if you get opportunity around 24,050, 24,070 kind of zone, you can buy with stop loss of 24,000. So these two strategy based on the levels you have to deploy when you get opportunity in the market. For Bank Nifty, it slipped below to 50,000 marks. So that, the underperformance is coming from the Bank Nifty. Most of the banking stocks have shown some profit taking. HDFC again, witnessed some profit taking in the previous day also. So looking at the Bank Nifty setup, 50,200, 50,300 is the major supply zone at this juncture. Until we're not able to take out these level, again supply would be there around those level for intraday trading perspective. And on the downside, if it again breaks below 49,800, it may slip towards 49,500 also. That's the major support area based on the put based concentration. So I think again in the Bank Nifty, the clear setup, because it's slipped below to 50-day moving average. So sell on rise is the strategy for Bank Nifty. 50,300 is the stop loss to go short in the Bank Nifty for any kind of minor pullback. But for Nifty, you can trade in both the direction at this juncture.
Okay, that's the view. And sell on rise, that's the strategy that one should adopt on the Nifty Bank Index. But since you're talking about banks, I'm sure a lot of our viewers may have queries on HDFC Bank, because that stock was cruising above that 1600 level for quite some time now. But yesterday it saw a 3% cut. Do you think there is a trend reversal, the kind of rebound or strength that we had seen in HDFC Bank of late? Do you think that has reversed?
So in the previous day, we have seen that HDFC Bank now slipped below to 20-day, 50-day moving average. So near-term setup is turned on the bearish side, and almost it's trading near to 1600 mark. If it's further continue to trade below to 1600, I think there would be another round of supply pressure we can see. If we draw a trend line, upsloping trend line on the daily chart, it's almost broken that trend line support area on the daily chart. So 1600 is the crucial level for the day. If it slips below to that level, yes, there would be another round of supply pressure towards 1570, 1565 kind of zone on the downside. So I think one needs to watch how the stocks open. But on the higher side, 1640 may act as a supply zone for any kind of minor pullback if it comes in the HDFC Bank. So sell on rise is the strategy for HDFC Bank till its stock not manages to cross and close above 1640, 45 zone.
Okay, 1640, 45 zone would be a crucial level to watch out for on HDFC Bank, and sell on rise is the kind of strategy you should adopt there. Just about a minute to go for the markets to open. Very quickly, what would you do with the Hero Motocorp? Because the Company has failed to meet expectations, right? In the first quarter, numbers came out post market hours yesterday. If you look at the profit, it has risen 36%, but still it has lagged estimates, right? In terms of margins as well, even though it has come in higher, 14.4% vis-a-vis last year, it has kind of missed estimates. Look at the stock in the last 5 sessions, it has actually done nothing. And in the last 1 month as well, we've seen the rally kind of fizzled out a bit. So Hero Moto, what should be the strategy here?
So I think Nandita 5400 is the key resistance area for the stock on the higher side. Until the stock not crosses those levels, there would be some supply pressure may seen in the stock prices. Stock is now trading below to 2050 day moving average. So I think again till the stock not crosses 5400, our strategy would be to go short if it comes around those level. Only short covering may trigger above 5400 level. On the downside, if it breaks below 5150, then further more supply can be there towards 50,000 level also, 5,000 level also.
All right, that's view on Hero Moto. Of course, the first ticks are coming now. We have had the markets that have opened up. It's a positive start, a mildly positive start, so to say, just about 2 to 3 points higher on the Nifty. Although we are, hanging on to the positive zone by the skin of our teeth. But the bank Nifty has started the day on a negative note, very flat. But let's see how things really pan out as the day progresses. Mid cap index, that's also somewhere around, just about 80 points higher or thereabouts. In terms of sectors, I want to just see what all the other sectors are doing, because banks are in a spot of bother, and so is the energy and FMCG pack. What's holding out is the IT pack. Remember yesterday that was the only pocket, that was the only sector that ended the day in the green, and today as well some strength coming in there, 0.5% higher for the Nifty IT index. The metal pack that was among the top laggards aside of the Nifty bank index, that's also managed to stage a very mild bounce back. So, that's also in the positive zone as we speak. Let's see how things really pan out as the day progresses. PSU banking index was also among the laggards yesterday. Today, some bit of green there as well. So, most of the sectors are in the green, barring banks, energy and FMCG. Pharma as well, that has been seeing good traction. In times when rate sensitives have, seen some bit of selling. But today we are seeing the pharma pack marginally in the red. Aside of that, if we look at the individual movers, then talk about a Hero Moto. Rajesh was just talking about it. The stock is the top Nifty laggard, given the fact that it has missed street expectations in terms of the first quarter numbers. In terms of other losers, we have the likes of Divi's Lab, Ultratech Cement. Adani Twins are, under a spot of bother, given the fact that there is some bit of profit taking yesterday. We saw good traction in the Adani group of stocks, given the fact that, MSCI has lifted the embargo from this group of stock, despite the Hindenburg report on the SEBI chief and Adani group that came over the weekend. Some of the private sector banks continue to see some selling pressure. So ICICI Bank, Axis Bank, all of them are under pressure. Bajaj Finance is the other one that's in the red. What's doing well? Hindalco reported numbers met estimates, and which is why we are seeing good traction coming in there. Almost a 1.5% kind of a gain coming in on a Hindalco. SBI, the banking behemoth, is doing well, 1% gain there. M&M, HCL Tech Mahindra, LTI Mindtree. So some of these IT names are providing support to the index, and so is ITC, despite the fact that the FMCG pack is in the red. Other auto names like Bajaj Auto are also doing well. So all in all, a quiet start. We have positive global cues to work with, but given the fact that it is weekly expiry day for Nifty and Nifty Bank, we are seeing a muted open, and we could see some bit of volatility as we go ahead. But Rajesh, looking at the open, where do you think the Nifty may take or may see the resistance zone in today's session, given the fact that we have had a fairly positive start? And secondly, what would you be recommending for our viewers in terms of stock picks?
So Nandita, I think the way market has opened, 24,250 would be the major supply zone for the day. I think that may act as a major supply zone. If we get any pullback, I think one should use that pullback as a selling opportunity in the market. This is purely for our trading perspective. So 24,200 to 24,250 is the supply zone at this juncture. Major call writing is placed around those level, and I think that would be a challenge for market to cross in the today's session. On the downside, 24,100 is the important support area after this opening, and if it slips below to those level, then we may see further more cut towards 2450 also. I think one can focus on the oil and gas sector. That sector is showing good traction since last couple of week, and most of the stocks are holding the ground. Oil India is looking very promising. Stock is continuously in uptrend since last 3 weeks. Stock is making a higher high low formation. So we are bullish for oil India. We are projecting target towards 740 to 760 on the higher side. So one can buy and accumulate this stock with stop loss of 685. Even some of the stocks from the sugar space is also showing good traction. Though again from the higher side some profit taking is happening, but we believe that sugar space may again attract some buying interest. So I think Balrampur Chini can be looked at. Here we can see a good traction on the higher side. 525 to 530 would be the target for the Balrampur Chini. On the downside, one can keep their stop loss around 500. And the third stock which we are focusing at this moment, that is GNFC. From oversold trajectory, again stock is showing buying interest from the lower level. Some recovery is expected in this stock. We believe that 700 to 705 could be the next target for this recovery. So those who have already bought or can buy at current level also with stop loss of 672.
Okay, those are all the stock recommendations from Rajesh. But Rajesh, before we move on to the viewer queries, I want to get in your thoughts on Hindalco. Numbers came out yesterday. The stock has, given negative returns, 10% lower over the last month or so. But last 5-day returns have been positive. Target prices range between 760 or thereabouts. CLSA has that target on the stock, and if you look at Jeffries, it has a target of 800 rupees on the stock. In the medium term, do you see levels of 800 within reach? Given the fact that whatever up move we had seen over the last 6 months, I think that kind of fizzled out. If you take a 2-month or 1-month kind of time horizon going backwards, if you see that the returns have been negative.
Yeah, this is the third consecutive month where we are seeing, supply pressure is sustained. Supply pressure is there in Hindalco prices. Stock after hitting a high of around 700, it's continuously in a down move, and stock is now slipped below to 20-50-day moving average. So that near-term setup is already on the weaker side. Metal stocks are also in nature, it's in volatile mode since last couple of weeks due to global volatility. I think until the stock not crosses above 650, 660, I think it may remain under pressure only. On the downside, 610 is the immediate support area or critical support area. If it slips below to 610, I think further more round of supply pressure we can see in the stock prices. So I think 800 is looks very tough for the stock at this juncture. Looking at the global scenario, looking at the volatility in the market, and metal stocks are still struggling to cross their short term, medium term supply zone. So I think 800 is tough, but yes, for near term to short term perspective, 650 to 660 would be the level where again one can review it. How the things shapes up around those level, then we can take further call for further more upside target. At this juncture, 660 is the target. On the downside, 610 is the support area or critical stop loss for if you are initiating any long position.
Okay, that's the view in Nalco. But since we are talking about the metal pack, I want to get in your thoughts on the Vedanta as well. It will be selling somewhere around 2.6% stake in Hindustan Zinc via the offer for sale route. Of course, it will be a positive for Vedanta at least because it can use the funds to repay debt and to fund capex as well. I think Vedanta has also been one stock in the metal pack that has not really been able to fire up. So here, would you be looking at accumulating Vedanta, given the fact that risk reward may appear a little attractive? Or would you say that look at other metal names? And of course, how are you reading the Hindustan Zinc charts as well?
So Vedanta, if I compare with other metal stocks, it's looking, positive. Long-term structure is positive. Stock managed to
Hmm.
give breakout on the long-term chart and holding the ground at higher level. A lot of, lot of actions are happening at, on the fundamental side also. Companies doing a lot many activity on the corporate this thing side. So I think till stock is holding above 405, 410, I think one should remain on the long side of trade for Vedanta. We believe that once stock manages to cross above 450 zone, I think rally can extend in the Vedanta and possible target towards 500 to 520 would be there on the positional perspective. So I think at this juncture, yes, one can use this decline as a buying opportunity with stop loss of 405. If we analyze on the Hindustan Zinc, so I think again it's behaving in the same manner in line with the most of the metal stocks. Now stock is almost trading near to its 100-day moving average, which is placed at around 560 zone. If it slips below to 560, then there would be another supply pressure we can see in the stock towards 540, 530 kind of zone. So I think Hindustan Zinc is avoided at this juncture, but yes, one can hold on to their position for positional perspective in Vedanta.
Okay, that's the view on Vedanta. Another stock that's in focus is Nykaa. The stock is up almost 20% from June lows, right? And numbers came out yesterday. Looks like a good set given the fact that profits have come in at almost 14 crores vis-a-vis 5.5 crores. So profits have almost tripled on a YY basis. Even revenues have risen 22% and margins have also come in higher. Given the kind of up move that the stock has seen since June, would you say it's entering the overbought zone now, or would you say that there's still more legs for upside from here?
So we have seen, stock is, trying to, form a base since last 8, 10 months. The stock is in range only, and now stock is approaching towards its a higher band of that consolidation range. So looking at the near-term structure, I think there is a still hope that stock may attempt to give breakout of this consolidation range, which is placed at around 200 kind of level. So 200 is the immediate resistance area for the stock. If at all stock crosses above those level and sustain above 200, then there would be another round of rally we can see in the stock, and possible target towards 230, 240 would be there. So I think till stock is holding above 175 zone, trend is likely to remain on the bullish side for the stock. So I think minor dip can be used as a buying opportunity. 175 should be your stop loss if you are buying in any kind of minor dips.
Okay, that's the view on a Nykaa. But with that, let's shift focus to all the queries that are trickling in this morning. Rajesh, the first one I want to address is, Suzlon. Aman Saxena wants to know your thoughts on where the stock is headed, and could he look at the stock with a target price of 96 rupees or thereabouts? Suzlon has had a phenomenal run, right? Last 1 month itself, it has clocked in an almost 50% kind of rally. Would you expect a dash at that 100 rupees anytime soon before, there could be any kind of trend reversal on the charts?
So we have seen very strong run up in the stock in last couple of months. The way stock has moved up, and stock managed to view breakout on the multi-month supply zone. I think there is a possibility that yes, stock may attempt to move to the three-digit, but it may take time. Looking at the market condition, maybe some profit taking would be there. But again, till stock is holding above 70 level, I think we believe that yes, there could be a possibility to continue further more upside, and 96 to 100 would be the next target on the higher side. So I think those who can hold the position for next couple of months can hold on the position with stop loss of 70. 100 would be the next target for the stock.
Okay, 100 would be the next target. Aman, hope that answers your query. But the next query is on a stock from the OMC basket. Som Mendigar has written in, and he wants to know your thoughts on HPCL. He's been holding the stock at 378 rupees per share, and he wants to know whether he should continue to hold, or he can actually wait for the long term. HPCL, OMC basket has been volatile. We've seen crude prices, Brent crude prices surge back to levels of $81 or thereabouts. So now 374 is where it's at. Would you advise him to hold on for the long term?
So as I mentioned that oil and gas space and this basket OMC basket is also looking promising for near term to short term perspective. Most of the stocks have shown good buying interest in last couple of months, and the way HPCL is now negotiating with its previous supply zone, which is placed at around 395 396, that level. If it crosses those level, I think about 396, there would be a rally in the stock, and then possible target towards 430 would be there on the near term to short term perspective. So I think here one can buy and accumulate the stock. Overall structure is looking on the bullish side. Near term trend is on the bullish side. Strength indicators are still on the buying side. So I think any minor dip can be used as a buying opportunity. Your stop loss should be placed at around 355 on a positional perspective, and three above 396 one can add more position for 430 440 target.
Hmm. That's the view on HPCL. Hope that answers your query. Couple of queries have come in on Mazgaon dock. The company will be reporting its numbers today. I can see Utsav Jain wants to know what one should be doing with the Mazgaon dock if they have some holding in the stock at the moment. And we also have Shatabdi Ghosh. She wants to know your thoughts on this stock. Of course, the stock has been witnessing profit booking, but we can't ignore the kind of up move that it has already seen on a YTD basis. It's up somewhere around, I think it's doubled. So, I mean, even after a 12% kind of a downtick in the last 1 month, do you think the risk reward is still unfavorable?
So for this calendar year itself, stock has moved up 100% for this calendar year itself, and some retracement is taking place. It is in line with the sector. I think most of the stocks are correcting from the same sector. Now stock is slipped below to 20-day moving average, and now still holding above 50-day moving average. I think on the decline, 4650 is the immediate support area for Mazgaon Dow. If it's able to hold above 4650, I think again some buying interest would be there, and maybe we can see some pullback action from those levels. So I think if you are holding the position, 4650 should be your stop loss for near term to short term perspective. On the higher side, if stock again manages to cross over 5000 zone, I think there would be resumption of rally again, and then possibly again stock may attempt to move back to its previous all-time high trajectory also. But at this juncture, 4650 should be your stop loss to hold the position.
Okay, 4650, that's the stop loss you should be working with on this particular stock. Hope that answers your query. But the next query is coming in on a happiest minds. Vignesh wants to know that whether we can see more dips to 560 levels or thereabouts. The stock has consistently been underperforming. If you look at any time frame, 1 month, 6 month, YTD, even 1 year for that matter, it has given negative returns. Is there more pain on this on the stock? On the charts rather? Is it headed towards 560 levels?
I think yes, there would be further more pain we can see in the stock prices as stock is making series of low top, lower bottom formation across all time frame. Stock is showing weakness. So we believe that if it's break below 740 mark, I think further more cut we can see towards 700 to 680 kind of zone in very short period of time. So trend is still weak for happiest mind. So I think one can avoid at this juncture. Don't buy the stock as still there may be more price cut we can see in the stock. Until the stock not able to cross above 850, trend may remain on the weaker side only.
Okay, that's the view on happiest minds. More pain can be expected going forward. The next query is coming in from Pankaj Kajalia, wants to know your thoughts on an AU small finance bank. This stock, I think in the last 3 months hasn't done much, and in the last 1 month as well, we've seen negative returns. Any particular level you'll be watching out for on an AU small? It's come off 52-week lows, but still quite a way off when you look at the 52-week highs.
So I think structure is still on the weaker side. Underperformance is there in the stock AU bank. the way stock has broken its important support area of 626. So if it's sustained below to this level for further more time, I think there would be more supply pressure we can see in the stock. On the downside, the next important and critical support area is placed at around 580, 570 zones. I think one should wait if you want to buy, wait for that dip. I think a stock may correct further towards 565 to 570 zone. That would be the level where one can again review it, and if it's create some reversal kind of pattern around those level, then one can deploy some trade. But at this juncture, I'll say avoid AU Bank. We may see further more cut in the stock prices.
Okay, expect more pain for an AU small as well. Avoid this counter. Hope that answers your query. Just about 7 to 8 minutes to go for the show. Just want to tell our viewers, if you have any queries, keep them coming in on a live feed. We'll try and take them up. But the next query, Rajesh, Raymond, that's one stock where we have a couple of queries coming in on our feed. Savia Machado wants to know our views on this stock, and we also had a query from Debu K on this particular stock. Raymond, in the last 1 month, we've seen almost a 17% cut. 1834 is where it's at. Do you think there are chances of the stock falling to levels of 1500? And if yes, what is the stop loss that one should keep in mind when it comes to this particular chart?
So I think the immediate stop loss is placed at around 1770. That level needs to watch. That can be keep as a stop loss if you are still holding the position. I think if it breaks below to 1770, then yes, there may be a further cut towards 1600 to 1560 kind of level on the downside. Though a long-term structure is still bullish for the stock, but the stock is now slipped below to 20-day, 50-day moving average, and volatile market may may create some more profit taking in this stock. So possibly I think 1770 needs to keep as a stop loss if you are still holding the position.
Okay, that's a stop loss. Hope you guys have taken note of that figure that Rajesh just mentioned. The next query is coming in from Rakesh. Wants to know your thoughts on a Godavari Power, whether one should invest at current levels. Hasn't mentioned his time horizon, but since he's used the word invest, I'm assuming it is for the long term. The stock has dropped almost 11% in the last 5 sessions. Is this dip a good buying opportunity?
So there is still corrective mode is taking place in this stock. The way stock is now slipped below to 1100 mark, I think there would be furthermore pressure we can see in the stock prices. If it's sustained below to 1100, then possibly down move can extend towards 960. That's the next level. On the downside, stock is continuously trading below to 20-50-day moving average. Near-term trend is already on the weaker side, but long-term trend is still bullish. So I think in decline towards 970, 960 is again buying opportunity in the stock. So I think wait for dip to initiate the long position.
Okay, wait for dip. Hope that answers your query. I want to take up a query on Vishnu Prakash. That stock, if you track it, Rajesh. Vipin Singh wants to know your thoughts on this stock for the long term. The stock has been doing well. In the last 1 month, we saw a 12% uptick, but in the last 5 days, all the gains have been reversed, and it has been a 17% kind of downtick. Even today, for that matter, it's down 7.5%. Vishnu Prakash, if you track it, what should one do with this stock, given the fact that looks like the up move that we had seen is kind of fizzling out?
So we are not tracking this stock, so I won't be able to give comment.
Okay, no worries. We'll move on to the next stock then. Talk about a PNC infrastructure.
Yeah.
How are the charts looking for that particular stock?
So PNC Infra, if we analyze the overall structure, stock is in consolidation since last 8-10 week. Looking at the long term structure, stock is still in the bullish side for the long term. but some consolidation with mild profit taking is happening in this stock. I think in this decline, 450 is the immediate support area. That level needs to watch closely. If it's able to hold 450 level, I think again there would be support buying action may initiate in the stock, and then on the high side, 490 495 is the supply zone. If it's crosses 495, then resumption of rally would be there, and then 540 would be the next target. So I think buy on dip should be your strategy in this stock with stop loss of 450.
Okay, Kishore, that was your query. Hope that answers your query. We're just about a couple of more queries to go. Last two queries really. Praveen Lal wants to know your thoughts on a Jubilant Foodworks. Good numbers we had recently. The stock hit fresh 52-week high recently. It has seen good traction. Today it's a little quiet, but in the last 1 month or so it has seen a good 11% up move. Close to 52-week highs. Should one wait for a dip before getting into this stock?
So stock has shown very strong buying action with volume, and the way stock is holding above the breakout level, I think till stock is holding about 630, 625 zone, I think one should remain on the long side of trade. Though there is some profit taking at higher level, but still we believe that till stock is holding above 625, there is a possibility that stock may again attempt to break out of its previous swing high, and then possibly target we can see towards 700 kind of zone also. So with stop loss of 625, one can hold on the position.
Okay, that's the view on a Jubilant. Hope that answers your query. The last query is really on Ratan India. Satya CK has written in, wants to know your thoughts for the next 1 to 3 months on this counter. Numbers have also been fairly good. Ratan India, if you track anything, any level that you would be keeping in mind?
So Nandita, you talking about Ratan India or Ratan Power?
That's Ratan India.
Okay. I'm not able to pull out the chart for Ratan India, so
Okay.
it's not there on my.
No worries, Rajesh. We'll circle back. No worries, no worries. We'll circle back next time I interact with you. No worries. But with that, Rajesh, we've come to the end of the query segment. I would like to thank you for taking out time and joining in and sharing your thoughts with us and helping our viewers navigate their holdings as well. Wishing you a very happy Independence Day. We are stepping into that holiday tomorrow, and I wish that you have a great trading day before tomorrow's holiday.
Yeah, happy Independence Day to you and the viewers of Moneycontrol.
Thank you, Rajesh. Thanks a lot. With that, before we end, let's take a look at the markets then. Not really doing much. We have slipped into the negative zone, but just about a 20-point cut on the Nifty. Sensex, just about hanging on to the positive zone. The mid-cap index, of course, there the cut has deepened. We can see, almost 1% kind of a loss coming in on the mid-cap index. The Nifty Bank Index as well is trading with losses, and in terms of sectors, I think it was the IT pack that was providing support. That's correct. That's the only sector in the green as we speak. 0.5% gain for the IT pack, but aside of that, all of the sectors have slipped into the red. You can see Realty pack taking the biggest knock, 1% down for this index. You have pharma as well, not providing any kind of support today. Metals have succumbed to selling pressure as well. Energy, autos, all of them are in the red. So all in all, it is expected to be a volatile day, as I mentioned at the start of the show, because both the Nifty and Nifty Bank will see weekly expiries today. So although the global cues are fairly strong, we are staring at a bit of volatility and weakness. But with that, we are completely timed out on this edition of Opening Bell. I would like to thank our viewers for tuning in and watching the show. Of course, we'll be back with you on Friday morning, but wishing you a very, very happy Independence Day. Rest it out tomorrow and come back and join in on Friday morning at 9 a.m. on Opening Bell again. But of course, today again we will be meeting at 3:30 p.m. with Closing Bell. Have a great trading day and stay tuned to Moneycontrol for all your other news and updates.